Okay, good morning, everyone. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, September 10th. Just a quick sound check, guys. I switched up some of the settings here. Just want to make sure that we're good on sound before we get started. Permendra, Eileen, Dale, Fauzi, Graham, Hussein, full packed house today. Mark, great to see you guys here. Thank you so much, Mark, Eileen. Mark, by the way, I got your email. Thank you for that. I will be in touch with you on that topic soon. Permendra, thanks for that. Okay, well, we've gotten some interesting price action overnight, to say the least. Most of the focus, actually, on my end was, if you guys remember the scalp setup from, I guess it was Tuesday night, dollar CAD on the back of that rally actually grabbed a nice short scalp off that. Dollar yen is in focus still. We got some commentary out of a BOJ advisor to Kuroda that suggested that maybe they may be on course for more QE. You saw dollar yen really surge into the highs. We're still at resistance right now as we speak, so we'll keep an eye on that. Euro yen also on a very nice and steady course here. We've been playing that one to the long side as well. So as we go through, obviously, any questions, trade setups, feel free to throw them on the message board. Let's jump right in. A quick look at the relative performance versus the greenback as we head into the session. You can see it's pretty dwindling here. We had a little bit more of a stretch on the euro side earlier, but Aussie with a gain of 0.73%, sterling with a slight advance of 0.18. Biggest mover on the day, obviously, Kiwi dollar, or Kiwi in general, down 1.69%. On the back of that interest rate cut that we saw last night. Also, keep in mind that, it wasn't so much that they cut rates, guys, that why the Kiwi plummeted. That was largely priced in. If you look at all the research wires and all the sort of consensus estimates, we were all expecting with 95% certainty that we're going to see an interest rate cut from the RBNZ. We got it. The pressure that you're seeing is largely due to the fact that they left the door open for more easing. They said that the further depreciation in the Kiwi was appropriate, and that leaves the door open for more easing, more softness from the monetary side, and obviously Kiwi dollar continues to be on the defensive. So we'll take a look at that. All right, let's jump right into the price action. So first things first, looking at the dollar index, just wanted to highlight this region right here, guys. Remember, basic 236 retracement, we went over this yesterday, so I don't want to stress it too much, but that same sliding parallel for the operative slope we were working off of from the April-May lows is still in play. So again, taking this slope, a sliding parallel off that from the reversal, massive reversal day we saw on the 12th of last month, has us holding support right in line with that 236. Also note that you have the September open, which comes in right here, at 12,028, right where we're trading at this point. So momentum, resistance at 60. If you see a 50 break and a move below this key region, you'll look for a drop down into basically 12,000, 11,978 or so. So as far as the index is concerned, hasn't really given us much conviction on the directional bias over the last couple of days just because of where the trade is, but certainly still leaves a risk with a break below support. Resistance. This is a parallel I added on last night, guys. We don't have enough certainty that this is in play just yet because we haven't seen many recoveries on it beyond here. But that would suggest that near-term resistance is basically with yesterday's high, and the invalidation level on the broader structure would be just essentially below where we opened the week. Okay, and that's right here. So we'll be looking for that dollar index to give us a little bit more clarity. Again, we can't trade this stateside, but gives us a nice picture of what broader base dollar movements are doing at its inception, an equally weighted average of the euro, Aussie, sterling, and yen. Was there any better layup short than sterling yen at 187.30, says Dan. You know what, Dan? I'm going to take a segue and jump right into that for you. Sterling yen, I know that we were talking about it here in the webinar yesterday. I was watching it just because of the questions you guys asked. I had my face glued to this all day yesterday. Here's what it looked like on the intraday. So I don't necessarily think that that was your last shot at the longs. I do think that you risk a pullback from here, Dan, just because, look, you got some radical divergence into those highs, and that's a really strong divergence signals. I often tell the guys, back in the daily FX classes, the strongest divergence signals for me are actually ones that are with one reference above the extreme and one below. So in the last two significant highs that you made here, you had some really strong ongoing divergence, which suggests that momentum could be waning. That said, give me 1 second here. What I wanted to point out is that former median line support, former lower median line parallel, and that's coming in as resistance right now. It's basically what you just ran into. Let me see if I can snap these levels. Sorry, guys. Give me one moment. Okay, so actually you still have a little more to go. 87.76 would be the 50% retracement of the decline. I want to see if we have any clear-cut structure to the advance here. Yeah, this would sort of be a little bit more of an area of concrete, or for me, of interest, of which you can take a little bit more of a swing side approach on it. Dan Mitten, good morning. Great to see you, man. So if you're holding a short, it depends what you're trying to do, Dan. If you're holding a short from the premise of a scalp setup, I'd be looking for 85.35, basically this region right here into the lower parallel. If you're looking from a longer term swing setup, I still think you may have a little bit more upside to go before it turns over. Remember, the thing with the yen, and we'll look at the yen in just a moment, I'm not looking too much into the rally that we saw overnight just because of the nature of it. You know, I woke up this morning, obviously, you heard the headlines that they were looking to do trillions of dollars in more QE. That's not really in line with what we've been hearing from the BOJ. That suggests that the inflation targeting is starting to run its course, that they may in fact reach that 2% inflation target in the first half of 2016. I mean, they keep bringing it forward. So I don't really know if that advisor commentary that caused that rally in the dollar yen, short yen that is going to be something that's going to be a lasting shift in trend. Long story short, Dan saying I short at 87.30 was an easy scalp. From that standpoint, Dan, well done, man. Right on. Right on. In fact, if we bring it up into even on the 1 minute chart, and I bet you if we bring up the 5 minute chart, it's gonna be the same thing. You had really strong divergence. The trigger break on the 5. Sure, absolutely. Low in price, 3-point trigger, looks pretty good. Looked pretty good. Well done. So, I mean, you're breaking sub 40 right now in the near term. So I don't know, Dan, if you're still holding that, man, I would just be maybe looking to chip some off as you get into that initial support target down here into 85.36, like I said. Then bring your stops in a little bit, break even or better, and see if you can play it down because momentum does look like it's breaking down with a little bit more fervor here, especially coming from overbought conditions into sub 40. All right, so keep that in mind, but looks pretty good. Well done. All right, so let's jump into the scalps from yesterday's setup. First things up, dollar yen. While we're at it, we were coming into support right as we published the piece. Here's what dollar yen looks like first on the daily. Okay, and we just wanted to highlight a couple of different things on the daily chart yesterday. The rally that we made and where we halted was the exact region where we opened the month. So you can see the thin purple line here. This is actually going to be the monthly open. You also had the sliding parallel, the same operative structure off the highs, which was right there. And the push through the 200-day moving average and close well below really kept, for me, the focus to the downside. Nothing's changed. Okay, I just want to say that for the record. From my standpoint, I was talking about this with Jamie just a couple of minutes ago. You know, I'm personally still looking lower below this region. As a disclaimer, I don't have any positions on right now. I've been looking for a short trigger. I think we just missed one right ahead of the webinar here as this thing tried to spike through. You saw a quick sort of consolidation here for a couple hours, and then there's the break just as you enter into the open of U.S. futures market. So I'm still looking below this. Notice that on that rally that you got in the news, you got some divergence in momentum continuing to suggest we want to be looking lower. None of the levels changed either. So, um, you know, you can never really foresee these types of comments coming out, guys, when a central banker or advisor, more even least important, comes out and says something like this, and you get a massive reaction in markets. None of the levels have been in compromise or have been compromised. Remember, the bearish invalidation level was that median line or that slope line that we talked about in the daily chart, but we're right back below it. Momentum couldn't even clear the highs. And I'm going to continue favoring short side of dollar yen. All right. The only change that we do want to do is take the retracement to the new high, not the spike high, but the high that we just made ahead of the US Open here. Adjust some of the targets, brings up that 618 to the Friday NFP high, interestingly enough. All right, so still looking for short triggers. We've made a little bit more of an advance to the downside off the highs here, so you'd wait for a little bit more of a recuperation, see if the opening range for US gives us a nice trigger to the downside. Downside targets 120.15, and then if we make it through that median line, right on to 119.60 and 118.90. Any questions on dollar yen before we move off? A little frustrating for me because I actually did have a quarter of the position taken off down there yesterday, and I got stopped out at break even on the rest of the rally, but now we didn't get an entry to get, we didn't get an opportunity to get back in again, so we got to start to see if we can find a nice trigger here heading into the end of the week. As far as event risk is concerned, you're pretty limited from the yen side of things. You do have University of Michigan, confidence surveys out of the United States tomorrow, which could shake things up a little bit for the dollar crosses. But broadly speaking, event risk on this pair is pretty limited. All right, moving right along. Euro yen was a much better play, and that treated us a little bit nicer. So this was on the radar charts the previous night, and we highlighted the fact that the corrective slope that we've been following finally gave out. Now, that corrective slope has defined the last 6 pullbacks in the euro yen. 3 of those pullbacks found a rebound off of that former median line resistance before we rallied through. So we came into yesterday's trade session saying, look, you're looking at a very clean Asia Pac opening range. You have a very clean consolidation here in momentum. If you see the top side break, we'll look to play the rally back into 35.60. And more importantly, this whole region to 35.90 is really critical, like super critical. And I'll show you that in a moment on the daily chart. Near-term support, 34.80. If you see a break below that, not necessarily want to play the short side, but I'll be looking to get long again down here. Well, you didn't really get much of a downside break, and the clear break of the upside structure kept the longs in play. So here's the Asia Pac opening range. You came back, you tested support, momentum held the trigger, topside break, you broke the highs from Asia, saw the rally right into that 135.60 level, and here we are still pressing that resistance. This is a key region of support based on a lot of different things. And I just want to go over the daily chart with you in just a moment. So what you're looking at here is the sliding parallel for the operative structure that we're working off the lows. You have the 200-day moving average. You have the monthly open, which comes in at 135.87. Okay, and then just above that, you even have a 100-day moving average at 36.11, so 11 pips higher, sort of cap the advance. This is a huge region of resistance. Any longs that you're in from the basis of the scalp earlier this week, you want to be wrapping it up around here. In fact, the divergence that you're seeing in momentum into the high suggests that you actually could see a little bit of a pullback. Trade remains constructive. Like I said from last night, we haven't changed that. The invalidation level remains at 33.84. What else could we say about euro yen? So moving forward, I guess, let's just talk about what we're looking at into the U.S. session. If we come into the U.S. session and we cap that advance here and you get some short triggers, or this short trigger finally gives out, this actually might be primed for a little bit of a short play back down to the retracements off that low, which are going to look like this. And the only one I'm going to want to stress here is that 236 and the 50. or the only one I'm going to get rid of, rather, is that 236. So we'll leave the 38.2, 56. Okay. So these are the amended levels I'd be working with. Again, highlighting this key region of support near term, just below the 134 handle. A topside break, by the way, you're looking at 36.40 as just the first initial target if you make it through the handle. That's how critical that region of resistance is near term. On the 5-minute, let's check out and see if we've got anything interesting here for Euro Yen. Yeah, again, I think we just missed the last trigger, so we'll have to see if we can recuperate this heading into US trade. Big resistance. Wouldn't be surprised if this presses into one more high, guys, into US trade to the open before it starts to turn over. Remember, 33 pip, 8-quarter daily ATR, should be looking for about 32, 35 pips per scalp on this. Any questions on Euro Yen before we move off? Probably the better plays from last night. Continues to pan out pretty well here. And Dan says, awesome advice yesterday on the grandfather trade. Closed my 2 shorts for 190 pips, flipped long, and closed for another 60 pips. Dan, I was looking at that one for you too, man. Euro pound. So we talked about the grandpa trade that we like to call here. By the way, just for everyone's information, we call it grandpa trade just because the ATR is so ridiculously tight at 83 pips. We were talking about sterling yen a moment ago, or some of the other crosses that have like a 278 pip. If you looked at sterling Oz, I put a piece on there on Daily FX yesterday. It's got 280 pips. So 83 pips for a scalper like me is a little bit of a slower burning trade, but they are sterling pips, so they will be from a monetary value, the value is still there. Long story short, it was a pretty clean play, right, Dan? So that 72.40 level of support held like a charm. You still look at this consolidation region, or this confluence region, I should say, rather, which is kind of having me still thinking range bound. But the intraday trade, yeah, I looked at that. This is what we highlighted yesterday right into the webinar as this short was playing out. I remember you were holding this, Dan. Really nice hold, momentum, couldn't get below the previous lows, and on that divergence signal, new extreme in price, topside move, gutsy move on the play for the long again, but still really nicely formed within that formation, right? Really clean still. So look, you might get this thing continuing. Let me just snap these for you. Their server's a little slow today loading the price action, but what I want to say is you might still get a little bit of consolidation right here, Dan. So remember yesterday we were talking about that sliding parallel, which matched up perfectly with that 38.2 at 72.40. You got that rebound there. And overnight we came right back in there and we held again, but we're still holding the ML off the highs too. So I would be looking for either, excuse me, did not mean to do that. I would be looking for either a break above this region for the breakout play, or a more concerted break back below that same level that we talked about yesterday that you rebounded. Why? Because this is now just the objective weekly opening range. So as it is, objectively, if you break below 72.40, that in and of itself is a downside signal. Keep in mind that we haven't been able to clear this low for the last 3 weeks, literally. So the levels are just ridiculously clear. As slow as it may be, with 21 as a quarter of the daily ATR, the value is definitely there. So keep playing it, Dan, as long as it's working for you, man. Well done, sir. It says range getting a little too tight right now. Better to wait for a break. Again, you have the clear-cut targets, man. 73 pop, and I think you're good. A break below 72.40, and look for a little bit more of a substantiated breakdown. Honestly, on this trade right here, guys, I'm, it's a range until it breaks. I'm not even going to try to call whether this breaks to the upside or downside. I can tell you objectively, I do think that the top side would be favored just because of the price action relatively that we're seeing in sterling and euro over the last couple of days. But That said, you might see a little bit more of a ping pong action here before we finally give out. Levels are really clear. Levels are really clear. Any questions on Euro Pound? Really nice setup from yesterday's webinar. All right. So we went over dollar CAD. We went over dollar. Oh, we did not go over dollar CAD. We'll go over dollar CAD. Went over dollar yen, euro dollar, euro pound. We want Aussie Kiwi and euro Aussie. And guys, if you have questions, and S&P for Mark. Okay. So let's jump into the dollar CAD. So where do we start on this? So dollar CAD, obviously they the interest rate decision yesterday saw a massive rally after a quick drop down. So actually, there was no real opportunity, guys, to get on the short here. The rally didn't give you any short triggers until you came into last night's open for Asia Pac. And this is where things looked quite interesting. You were looking right at the lower or the upper median line parallel. Momentum gave you some divergence into that high. It was an exhaustion stretch after an event risk, which is something I love to play. They tend to be a little bit more of a, what's the word I want to use? Orderly scalp. But essentially, there was a very tight stop, right? Just above the 133 handle with an entry there, looking for about 34 pips. And on the pullback, the limit hit last night. So the rebound here, again, you're looking at the same level as the bearish invalidation level, hasn't changed. I didn't really see anything earth-shattering in yesterday's statement or from the policy that would suggest any major rally here in the CAD, meaning dollar CAD to the downside. From a technical standpoint, I still think the risk is there. Okay, look at the momentum continuing to consolidate. This is coiling up like nobody's business. Look at price action. We talked about that resistance region. This is basically the reversal day close that you made on the 26th. That comes in at 33.87. Excuse me, the high day close at 33.35. A break above this is what we need to get back on the bullish side. Near term, bearish invalidation, 32.87. No change. So looking for short triggers below this region. We could plow right through this today. I don't know. I'm looking for short triggers into the U.S. Open just below that. If we get them, you could get another opportunity for a pullback to the downside. If we break through 87, like I said, 35, wouldn't really look to play this region, but would look to buy pullbacks if we clear that 33.35 region, 33.50 region to the upside. So dollar CAD may not be primed necessarily for a trade if we breach, if short triggers start to surface into that region at 32.87 to the open. I'd be looking to get back on the short side. Here's what it looks like on the daily chart, or on the scalp rather. Here's dollar CAD. Here's what it looks like on the 5-minute. So could get a little bit of a short trigger here, break to the downside, momentum into the highs, and you have key resistance at 70, what is that, 87. 87. All right, so coming into this region, if we make a final stretch higher, we'll look for another possible short trigger to the downside there. Yesterday's trigger was also very clear. Here was the trigger that I used. And actually, the entry wasn't even on the break. It was on the test of the trigger as resistance. That held, and then we took into a short against the highs. Booked it a little bit early. 30 pips was the objective here, but I just set the limit at that last swing high on the stretch from the BOC. Here we are, again, approaching that resistance. So dollar CAD still on the menu. Still on the menu. It is a chop fest, so I just be cautious, but the range is there, pretty well defined, and the resistance level as well as the bearish invalidation is pretty apparent. Questions on dollar CAD? All right. Last but not least, I do want to jump over to yesterday's radar chart, and this was one to keep an eye on. It obviously has made a huge breakout at this point. Today's close is going to be absolutely critical, but the coil continues was sort of the title of yesterday's piece as we were watching at the Aussie Kiwi. We've been following this consolidation essentially from mid-July when this thing continued to hold a key support barrier into 109. Basic resistance off the highs has continued to level off every advance, obviously, except for that massive day that we saw back in August. But the monthly open came in at 112.13, and that again confluenced with that same trendline resistance off the yearly high. And we're looking for the consolidation break in momentum, which has been in coil mode for the last 3 months. Here's what Aussie Kiwi looks like now. All right, so we plowed through that earlier today. We got as high as 112.47. Okay, the open for the month is 112.13. So today's close is going to be absolutely paramount. I'm also watching that resistance trigger off the highs and momentum. If that breaks, you'd be looking for a run into the high day close from last month. That's 112.78. High day close for the year comes in at 113.48. So real critical time period here for Aussie Kiwi. I'm not really sure it's ready to operate on just yet, which is why I was on the radar charts last night. But you're coming into the stretch highs that you made for that last swing in August and the 2014 high day close we just went over. Actually, no, that's not going to stress that level anymore. 2015 high day close is right here at 13.48. Dan says Aussie Kiwi has been an easy range trade. I got long at 109.60. Only easier trade is selling every single bounce in Kiwi, LOL. Oddly enough, I will show you a Kiwi setup, or I'll show you the Kiwi chart that I'm looking at. I actually got into a long position on Kiwi yesterday, Dan. I actually grabbed some pips and then got stopped out on the rest, but I hear you. Kiwi, Wheeler is just a genius as far as being able to talk down the currency without actually implementing much dramatic change in monetary policy. I mean, they did cut rates again, but continues to go back and pedal and say it wasn't a mistake to raise rates earlier this year. It goes back and say again, there's still room for more easing. We want a weaker Kiwi. The thing that the market was also that harped on a couple of different points, and it's easy to tell, guys, when you go to the terminal, you'll see just all the highlighted things in red, what markets are jumping on. One of them was we're watching China very closely, which kind of harkens back to what we saw a couple of weeks ago with the panic mode and the massive turnover in Chinese equities. So in any event, looking at Aussie Key, I mean, it was a pretty basic range trade. But Dan, if this is legit and we close back above 12.12 today, it could be more of a breakout trade. Okay, so I'm going to be watching today's close very closely. If we close below, there is a risk for a pullback. Any shorts you take on this, if you do start to play this short scalp or the pullback, half leverage, guys. Just play it on half size. Don't, overplay the downside on this trade. If that breakout is legit here, you could be looking for a pretty strong upside stretch there. All right, I wouldn't really change any of the levels either. We're pretty much right in line with the same retracement from the range that we've playing for the last 3 weeks. So whether you flip this upside down or on its belly, it's going to be the same targets from a scalping standpoint. Any questions on Aussie Key? Okay. And last but not least, the trade I wanted to look at, I was looking at it yesterday. I didn't think it was necessarily worth to point it out just yet on the intraday page, guys, was Euro Oz. It's something that's in focus. It's kind of an ugly setup, but the only thing that I wanted to highlight here was that the weekly opening range is basically hasn't been more well defined in this than it has been for some time. So here's the scalp setup that we were working with alongside of this trade last week. The break back below the lower median line parallel sort of invalidated that. And here's that key support pivot that we started with that initially put us bullish last week. It's the same level that's now basically the weekly opening range low with the weekly opening range high coming in at last week's high. And you're basically looking to play that same pivot break. We're right there still. So for Euro Oz, I've been a little bit of a, what's the word, tossed on this one as far as what the broader play is. Long story short, I'm a little bit more of a constructive player on Aussie. I'm a little bit more constructive on Euro as well. So the chop here, the sideways lateral movement shouldn't be that big of a surprise. Looking for a break of 61.28, looking for a break below 158, play that range. As long as you're there, you want to buy at support, you want to sell at resistance, super easy. Don't think too much into it. If we do get the break, which inevitably, obviously, we're going to, and it turns out to be to the downside, you should be looking for a run towards 55.70, which turns out to be kind of that stretch low. Is it the stretch low? Why is that not snapped? There it is. Sorry, 55.80, which turns out to be the stretch low post the high that we made for the year. And the momentum signature has just been sitting there at 60, right? We made a couple of drips, tried to press below it, but haven't really made much progress. So a trade that may not be primed yet, keep it on your sights. Once we get a breakthrough, I do think you get a nice play here on Aussie Key. In the meantime, from a scalping standpoint, the only thing I do want to highlight, guys, 74 pips, it's got a larger, much larger ATR. So if you're going to scalp this, another one that you might want to think about reducing leverage size, be a little bit more nimble, specifically as we hold this range. Once we break out, I think you'll get that run no problem. But until we do, just keep an eye out. Dan says, I am at a loss with cable. What's your thoughts? Thanks. The webinars and your advice is awesome. I appreciate that, Dan. And again, you're the one trading, man. I'm just highlighting what the market's given us. The technicals they're not my technicals. They're the technicals. We're just pointing them out, right? I appreciate that, though. Let's look at British pound. Let's do British pound, and then I'll go over sterling Aussie, which was on Daily FX yesterday. Again, I'm going to give you guys, obviously, the trades that I'm operating on. You might see a setup that comes on Daily FX. If I really do think it's a setup that I'm going to be personally operating on, I'll bring it into SB as well. But obviously, you guys are going to get the cream of the crop. So here's sterling dollar. Okay. From the daily, the only thing I like about sterling, Dan and who else was asking about that? Andy, the only thing, guys, I do like about sterling is actually the daily levels. The intraday chart is a little bit trickier just because you're getting a lot more back and forth and it's sort of a drifter, but the daily levels have been absolutely critically on point. So if you remember the radar chart from earlier this week on Monday night, right after the holiday, we were talking about that slider, and we said, hey, look, there's a median line off the high. We're checking it as resistance. If it breaks through, look for 53.40. That's the broader bearish invalidation. If we make it through that, we're probably looking for a run into the 54.50, 54.60 level. So you got the break above the median line, cool. You passed through 53.40, cool. Yesterday, we finally came into that major key resistance, 54.47 into 54.60. The high today, 54.47 on the dot, 54.47.7. Okay, we even overshot it by a couple fractionals. Long story short, where do we go from here? Look, I'm not a real big fan of taking any type of significant measurements or retracements or extensions off of these spike emotional highs. The BOE obviously didn't offer much this morning. They held rates. We expected them to hold rates. I actually didn't check if the vote was the same. So just give me one sec, guys. Yeah, 8-1 vote. Okay, so same thing. Maintains the benchmark interest rates, and it was an 8-1 vote with one dissenter. So BOE says global's risk must be weighed versus domestic prospects. Greater downside global risk merit close monitoring. Considerable uncertainty on pound impact on inflation. Risk in China, emerging markets have increased. Inflation pickup around the year and remains likely. Asset purchase plan at 375 billion. Staff cuts third quarter GDP growth forecast to 0.6%. Okay, so sort of the takeaway here is going to be that they're watching global events haven't alerted the MPC's central view, or haven't altered, excuse me, their central view, which means China and what they're seeing in Europe, while they do note it, it means it hasn't necessarily steered course for them on monetary policy at all yet. And the fact that they're watching the impact from the sterling, right? They're trying to stoke inflation. Long story short, we came into a major resistance. You're seeing some divergence into that high. Look, you could get a pullback from here. Dan, the trade stays constructive, man, near term above 53.40. So I really wouldn't be looking necessarily to play the short side, just because you don't really have a really strong stop unless you use this high. I wouldn't necessarily try to take a stop against that right now. So I would be looking for a little bit of a pullback here. Inevitably, I'd be using that pullback to get back on the long side. This is the range in focus, 53.40 into the 54.50 level. This is what matters right now. A break below that, you'd look for a drop right back into that key region we started off the week. Okay? But right now, this is sort of the range in focus. And keep an eye on the dollar index, guys. Again, even if you can't trade it stateside, guys, it can give you a really nice tell on what's going on in the broader picture. So if dollar breaks through that support we talked about at the beginning of the webinar, sure, look for that pop through resistance on sterling. If we kind of hold this range for another day in the dollar, I would expect that same range in the sterling to give us that play as well. From a near-term standpoint, the 5-minute chart, let's see if we have. Yeah, this thing's completely flatlining here. So, Dan, it's funny because when you say I'm at a loss with cable, what are your thoughts? That's fine, man. I'm at a loss with pairs sometimes too, right? And that's the beauty that we have when we're looking at these near-term prospects, is that I can have 4 or 5 setups that I'm looking at. I'm obviously not operating on all 4 or 5, right? But that's the flexibility it gives us. We can cherry pick which one has the ideal entry, which one has the cleanest levels. And if one goes rogue, as it were, or you just don't have clarity on it, no problem. There's a bunch of other setups that we can look at to give us a little bit more of a play intraday. So Dan, hope that helps on cable, man. What I wanted to do is go over cable Oz, which was the setup that I posted on Daily FX yesterday. So if there's no other questions here on the British pound, the levels are still pretty clean. Here's sterling Oz. Now, technically, this thing surged through the near-term bearish invalidation level I noted yesterday and came right back below. So I'm actually looking lower again in it, but there's the inevitable support barrier that we were looking to hit right into 2170 or 216.70, excuse me. Here's what the scalp looks like. Excuse me. So here's where we were when we published the piece on Daily FX yesterday. We said, look, if this breaks, this is going to be the near-term bearish invalidation level. As long as this formation holds off the highs, I like this thing lower. So you saw a quick breach, test of the weekly opening range high, quickly failed. Then that same trigger we were looking at in the webinar or in the report yesterday finally gave out as we were breaking back below the bearish invalidation level. Now, by the time he made it down this low, he had a hell of a range to try to take the stop against. It is a wider range ATR at 73 pips for a quarter of daily ATR, but here we are. Downside targets have all been taken out. This was the key support that we noted in yesterday's scalp report on Daily FX, and that's sort of where we're trading at right now. So for sterling Oz, and this is one of the reasons I want to talk about Aussie or sterling first for you, Dan. If you put things in perspective with what the sterling's doing, right? We just came into a major resistance. Now we're checking that same range of support. If we look at sterling Oz, this actually might be a little bit better of a play. You have a wider range on it, and if the breakdown below support happens, which is that 216.70 to 16.80 region, then you're probably in for a much steeper drop down towards 215.27. Key support on the dailies all the way down here, 214.20 to 215.27. 215.27, by the way, is the July high, the August opening range high, and the September opening range low. So this singular pivot, really critical in price, also coincides with a basic trendline support off the lows. So the levels are like super clear on it. And while I didn't want to throw it out as a major scalp we should be messing with late in the week with a 300 pip ATR, the levels are pretty well defined for what we do want to do if any of these are invalidated near term. And that's part of the game, guys. I know it's been a little bit more of a tougher trading environment. It gets tough when the market gets quiet and flat lines, but it also gets tough when markets go into schizo mode, right? And you get massive rallies, massive downs, then you get huge reversals on the next day. That's where being nimble and having your levels mapped out prior to the trade is absolutely paramount. So it's just some food for thought there on that. Dan says, yeah, you can run over quick on some of those sterling crosses. So these are the only two that I'm really focused on at this point, is sterling Oz and sterling dollar. We looked at sterling yen earlier today. I'd be watching for that support here for a possible stretch higher. The divergence here gives us justification or gives us warning that if we do see that support break on the downside, you're likely to see a pullback more towards 83. Which is where you'd start to want to look again for the long side of the trade. But euro pound, that's clear as day as far as the levels we want to be targeting as well. We went over this. Those are the only four I'd really be focused on. Sterling key is way too crazy for me at this point. I'm not gonna mess with this just because of what we're seeing in the Kiwi. Here's what Kiwi dollar looks like, by the way, on the back of that release. And this is sort of the long I was telling you about yesterday that I played in Kiwi was based on this. Funny enough, literally, that's the formation that we drew to start off the week. The only justification I had for keeping this was the pivot that we saw here. I didn't even see this yesterday, but it just so happened to cover the highs with a basic 38.2. Caught that high, right? No drop on the pivot here on the median line, the drop in the decline on the sell-off, but look where we found support last night. Right into that lower median line parallel. So I just tacked on a quick retracement of just the RBNZ move, or from the RBNZ into the lows, and we put a quick limit at the 50% retracement. So on a trade like that, guys, it's purely based on risk to reward. Market was trading into a median line support. The stop was against the lows. So you're looking at like a 10, 15 pip stop, 27 pips is a quarter daily ATR, and you go for it. A trade like that, I don't really want to necessarily encourage you guys to be calling lows, but when you have a risk to reward that's much in your favor, and you have there was a lot of things to look at here. You had the momentum signature breaking back above 30, support, tight stop. No reason not to give it a shot. Question here says, you can get run over quick if stops are not tight, is what I meant, sir. Oh, sorry, Dan. I thought you were asking to look over some of the sterling crosses. My bad. You're absolutely right. You're absolutely right, at least from a scalping standpoint. I don't want to encourage it too tight, guys, because you can continually get stopped out even if your directional bias is right, and that can be very frustrating. But as long as the stop has technical merits. And one other thing that I was answering an email yesterday, guys, and someone brought up, I just want to bring this to light. I want to make sure there's no misconceptions. When we're talking about 27 pips as a quarter of the daily ATR, that's not necessarily going to be a blanket statement of your profit target. It means that off the lows, you should be looking for a 27 pip stretch. So if I take an entry on this, quarter daily ATR is about 27 pips. You should be looking to wrap that up at about 27 pips off the lows, right? Not necessarily from your entry. Because if you grab a late entry, there's no justification for you trying to take a 27 pip stretch from here, right? So I just want to make sure that we're kind of on the same page with that. But back to dollar CAD 5 minute, please, says Graham. Sure. And the trigger did give out. Who is telling me that? Vesky says, hate to point it out, Mike, but I think we just missed the trigger on dollar CAD. Yeah. You know, I sacrifice a lot of trades to do this webinar. Gosh darn it. We'll get more opportunities. No worries. No worries. It's the U.S. opening range actually tends out to be my best play. And these days, guys, let me tell you a little secret. Watch the 11:30 into 12 European close, and then the 8:30 into 10 slot here in New York for the Asia Open into Sydney has been, or Sydney Open into Asia rather, has been phenomenal. Has been phenomenal. In fact, it's not always necessarily even the break; it's the initial move that you fade. So the opening range for the first hour of that session has offered some really nice plays. And that was actually the dollar CAD entry. And who would think that you'd entry a dollar CAD in the start of Asia trade? Turned out to be a beautiful trade, right? So make sure that we're being mindful of when we're actually entering these positions as well. SPX for you, Mark. Again, you know me, I'm not really a big trader of or intraday trader for the SPX, but here's what I'm looking at. Remember yesterday when we were in the webinar, we were talking about this region, and literally CFDs were trading up into like 1993. We were at the highs. Well, we closed that session way off that high. And that confluence resistance is still in focus. Is still in focus. I'm not going to invalidate it just because we spiked through. So that still keeps the attention on 1980, 1978. Still keeps the attention on near-term support at 1914, the 50% retracement off the lows. And I still think you look for consolidation. I still think you look for consolidation. Capitulation, whatever you want to call it. For SPX, tested the Monday low and reversed. That's why I closed the dollar yen short and went long. Tested the Monday low. We didn't quite make it to the Monday lows, at least not on the CFDs. If you're looking at cash markets, maybe Mark, but CFDs didn't quite test the lows. We did test the Tuesday low here, and it did hold. Okay, we're going to remove this 618 because at this point we've sailed through it just too many times, making this messy. No. I don't like it. I don't like it. I think you play the range. I don't think you look to position for anything outside of this range at this point. That's what I would say. Let's see what 30 looks like. He says, I thought it was Monday. Sorry. Yeah, it was Tuesday. Wow. He took a long Kiwi. That takes some guts, says Dan. I mean, look, again, Dan, it's not guts or not, man. It's the technicals. If you have confidence and you have conviction in your analysis, then, you know, whatever. It was at support. You had a tight stop. What's the worst going to happen? 15 pip stop. So even the momentum signature since the start of the week, this is a 30, by the way, on the SPX. Here's the start of the week. Does look like we've seen a material turnaround. So here's the open of trade. Your opening range low for the week comes in at 1920. Momentum, constructive, break sub 30 for the first time of the week. Hold at 60, shifts the momentum bias to the downside. So the momentum profile does look like it's getting heavy. Break of the weekly opening range low, 19, again, right around 1920. I'd be looking for 1914, at 50% retrace. You'd look for a drop in that 1895, 1885 region again. Might not be out of the woods just yet for the equity markets. Hey, Mark, you're more than welcome, man. He says, I'm confused now. Did that offer some clarity, Mark? Are we on the same page now? He says, yes, yes. All right, cool. Great. While we're here, German 30, you've been seeing some pretty radical reversals off of some really nice resistance regions. I think we looked at this yesterday, I'm not sure, but the upper median line parallel confluence with the 1618 off that same high. Nice reversal off that yesterday in the DAX, that's the German 30. Same type of consolidation that you're seeing in the Dow with the S&P, same type of consolidation that you're seeing in the NASI is the same as the S&P. And the problem is that, all these trades are essentially the same trade, whether it's euro, risk, equities, or the yen. You're essentially putting all your eggs in one basket every time you take one of these positions. So, keep that in mind. All right, so this is the last webinar for the week. We'll be back on Tuesday here. Remember, Monday's the public webinar on Daily FX. Tuesday, Wednesday, and Thursday we'll be back here on SB. If you have any last-minute questions, guys, or pairs you want to throw out, feel free. We will take a minute here and look. I think we covered everything on my end. As far as the economic docket is concerned, guys, heading into the end of the week, just want to quickly review again. The Aussie. Didn't talk about the Aussie. Real quick, guys. So the Aussie employment numbers came out yesterday. We're pretty actually strong. We were expecting unemployment to uptick, or to downtick rather, an improvement in the unemployment rate to 6.2%, and that's exactly what you got. But I just wanted to highlight Aussie now coming into some near-term resistance. We've invalidated this, or we've surged through it before. The median line off the high has still continued to define price pretty well. So I'm still watching that, and it coincides with a longer dated 786, and that's basically 70.90, which is what the high was today. The high so far was 70.92. So near term, I'd be watching the Aussie. I was just telling one of the guys on Daily FX yesterday, Aussie has been, over the years, the trade that I've been most active in my entire career, and it's killed me that this has just been a slow decay of the trade. I want to see some back and forth. As a scalper, as a near-term intraday trader, I kind of need that back and forth. These one-way droopy trades don't really give you much opportunity for entry. So I think we're getting that, guys. And if we do, I'm looking forward to Aussie giving us some nice plays here, moving deeper into the month. So watch that near-term resistance if this is in play, and it's way too early to tell. But this is a structure I was looking at earlier today, right? If this is in play, you'd start to look for some resistance, basically in the pullback that we're getting right here, right? And obviously, if we break that resistance that I was talking about in the daily chart, look to play the upside, finally. Opening range high for the month doesn't even come in until 71.55. And the median line for the structure that we've been following for the last, couple of years at this point, comes in just ahead of that opening range high for the month at 71.25 or so. So some clear-cut targets on the upside if we make a break on Aussie as well. All right, guys, we'll wrap it up there. Have a great session. Best of luck trading. We will pick things up, like I said, on Tuesday. And we'll give you an update later tonight on the intraday updates on SB. Guys, have a great trading session. Great weekend. We'll see you next week. Cheers.